Going by media reports, in the Union Budget 2025-26, the government is expected to allocate a massive 2.9 to 3 lakh crores to modernize the railways. This ambitious plan includes expanding the 68,000 kilometer network and rolling out 400 high-speed Vande Bharat trains by March 2027. Not only that, the National Stock Exchange of India in November last year launched Nifty Railway PSU Index, an index that, as the name implies, tracks PSU stocks that are either owned by Indian Railways or cater to them. No doubt, with such ambitious plans and all the hype around the budgetary allocation by the government, railways look like a highly attractive investment opportunity. But before you just jump into invest, what is all that you need to know about the railway stocks as a new investor is what we are going to cover in today's video. Hello and welcome to our channel 5 Minute Finance by ET Money, where we talk about the basics of investing and personal finance. So every year around budget, there's a lot of hype about the railway stocks. The government announces major allocations for railway infrastructure, new trains and technology upgrades. But have these announcements translated into gains for investors? Let's look at some data from the past 3 union budgets. In Budget 2024, the government made a record allocation of 2,62,000 crores to the Indian Railways, higher than the earlier 2,40,000 crore allocation in 2023-24. In fact, this allocation is 9 times higher than the budget allotted in 2013-14 as the current government came into power. But despite such hefty allocations, railway stocks showed negligible gains or even mild corrections, disappointing investors who expected a rally around the budget period. On your screen, the charts show price movement of a few major players in the Indian Railways during the last 3 budgets. You can see mild upward movements here and there before the budget in the years 2022 and 2023. But post-budget, the stocks have either remained flat or showed mild corrections. In 2024, though, investors saw mild gains pre-budget, but prices, again, either remained flat or some went downwards after the budget. In fact, this year, if you would have seen, the railway stocks are in red pre-budget. Now, that could be due to broader market correction. So let's check out how are they doing on the ET Money app. So year to date, the Railtel Corporation is down by 10%, Titagarh Rail Systems by 15% and so on. So historically, we did not see any major returns being generated by the railway stocks in the short term around the budget announcements. Next, let's talk about the newly launched Nifty Railway PSU Index. The Nifty Railway PSU Index tracks the performance of public sector undertakings, PSUs, involved in railway operations or allied activities. If we look at its constituents, so the 14 stocks in this index are on your screen, with Indian Railway Finance Corporation having over 19% weight, followed by Rail Vikas Nigam and IRCTC with over 17% allocation each. Now, one thing to note here is that the top 4 constituents, IRFC, Rail Vikas Nigam, IRCTC and Container Corp of India, constitute 70% of the total index weight. The remaining 30% is distributed across 10 stocks, with National Thermal Power Corporation, that is NTPC, holding the largest share at 7%. Another thing to keep in mind here is, though these companies are all in some or the other way related to Indian Railways, they belong to different sectors. Look at the sectoral allocation of the index on your screen. So if we talk about the returns, well, the index has generated returns worth 25.42% in the last 1 year. So one thing is clear. Nifty Railway PSU Index provides a focused approach for investors who want exposure to the overall railway sector without picking individual stocks. This index creates a benchmark for the railway sector, helping investors track its performance more systematically. But stay cautious of higher concentrated allocation to the top few stocks. Now coming to the big question. Should new investors ride the railway hype as the government is making and is expected to make bigger announcements this budget? Well, not without proper research. The Indian railway sector is undoubtedly undergoing a transformation. Ambitious projects like Mumbai bullet trains, 4,000 Vande Bharat trains by 2047, and the allocation of 10 to 12 lakh crore for railway infrastructure in the next 5 years sound exciting. But these are long-term stories. Investors must understand the sector's cyclical nature and other challenges before investing. You must know that railways as a sector is heavily reliant on government capex. While plans to invest in high-speed trains, reduce carbon emissions, and decongest roads are commendable, execution timelines are often uncertain. Also, stocks in this sector can be volatile, reacting to policy changes, budget announcements, and project delays. So, what should you do as an investor? Three things. Understand the business. Not all railway companies are the same. Research whether a company specializes in construction, freight, technology, etc. Look at fundamentals. Focus on revenue growth, profit margins, and order book size. For instance, RVNL's recent projects or Aecon's international contracts can be indicators of potential growth. And when it comes to financial data, ET Money can be your best resource. You can find financial data of all listed companies on the ET Money website and app. Number 3, diversity. Use the Nifty Railway PSU Index as a part of a broader investment strategy. Remember, investing is about understanding the business and making informed decisions. If you are a new investor, take your time and study the sector well. So what do you think about investing in railway stocks? Share your thoughts in the comments below. Don't forget to like and subscribe. Do let us know if you want us to do more similar videos. And I'll see you soon with another insightful video.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.